Hey everyone, welcome back to Corporate Decoder, the place where we dig into the documents that big companies don't really want you to read. And today we are looking into Zhanling International's 10Q. It's their report card for the last 3 months. But I have to say, after reading this filing, I'm not sure I should be congratulating them. Zhanling International says their main job right now is to find and buy another company, but this report suggests they are facing some major challenges that might make that difficult and might cause the company to go out of business if things don't change. Let's get into it. First, let's look at the condensed balance sheets, which is a snapshot of what the company owns and owes. As of February 28 of 2025, they had total assets of just 4,465. Essentially, the company is struggling with having very little assets while owing quite a lot in liabilities. At 8,546, simply the company is struggling with having very little assets while owing quite a lot in liabilities. Next up, the condensed statements of operations. This basically show whether the company is making or losing money. For the 3 months ended in February 2025, they had a net loss, which means that they are losing money of $7,595. The same thing happened last year. When we expand that to the 9 months, they lost more than $24,000. That means the company is consistently losing money and not bringing any income. General expenses are $24,000. That means the company is consistently losing money and not bringing any income. General expenses are $24,000, but if there was no money coming in, those expenses are all losses. It's like trying to fill a bucket, but the bottom is ripped. Moving on to the condensed statements of cash flows, it shows how the company is managing its cash, and for the 9 months ending in February 2025, the cash used in operations was over $30,000. This means cash went out for running the business more than cash came in, since they had no cash on hand and they lost more than $30,000. They took a loan, or what they called advances, from related party. If they did not receive money from people related to the company, they would not be able to continue. According to the report, Zhanling International was created with the goal of acquiring companies, specifically in China's consumer market, and this sounds good, but the company's history has been rocky with many changes in leadership. There were some changes of who owns what. It says people were appointed and resigned, which create uncertainty. This shows there have been some rocky roads over the past few years, which affected the business. Then there's the big warning, and it's called going concern. This essentially means there's a big question mark over whether the company can stay in business for the next year. They talked about how they lost money and are in debt. They mentioned they hope to get more money but cannot be sure. This is like the company is walking on thin ice, and if they don't find solid ground fast, they might fall through. For financial instruments, the company believes what they owe is pretty close to what they're worth, and that's because the amounts are short term. This means they're trying to keep things simple when it comes to estimating value. The company follows the guidance of Accounting Standards Codification, ACCSN 2010, fair value measurements and disclosures with respect to financial assets and liabilities that are measured at fair value measurements and disclosures, with respect to financial assets and liabilities that are measured at fair value, as follows. Level 1, observable inputs such as quoted prices in active markets. Level 2, inputs other than the quoted prices in active markets that are observable either directly or indirectly. And level 3, unobservable than the quoted prices in active markets that are observable either directly or indirectly. And level 3, unobservable inputs such as quoted prices in active markets that are observable either directly or indirectly. And level 3, unobservable inputs in which there is little or no market data, which require the reporting entity to develop its own assumptions. The report also points out related party transactions, which means the company is getting money from its own executives. The company owed over $30,000 to its chief executive officer, who gave them even more money. The problem with related party is that terms might not be as strict as a regular bank loan. And finally, the report admits that their disclosure controls and procedures aren't working well. This is a fancy way of saying they have issues with accuracy in their own reporting. The report identifies material weaknesses, the major one being inadequate segregation of duties, meaning too few people are doing too many jobs and there is no one checking what they are doing. Taking a step back, Zhanling International seems to be facing a tough situation. Their plan to buy another business is in jeopardy because they are losing money, have a lot of debt, and there are questions whether the company can even continue in business. What does this all mean? Zhanling needs a major turnaround, or it might not be able to keep going. They need to raise more money, get better financial controls in place, and find a way to actually start generating income. The fact that they need related parties to lend money while having accounting issues is not a sign of health. It is unclear what will be their next move. Thanks for watching. If you found this breakdown helpful, please hit like, drop a comment, and subscribe for more corporate deep dives.